Now I figured after how much SCHD or the Schwab US Dividend Equity ETF that I've been purchasing over the past several years, and the fact that I, as of right now, own almost 2,300 shares collectively across my portfolios, which earns me around $600 in dividends per quarter. I figured maybe now better than ever, it's a perfect time to make a complete beginner-friendly overview video about SCHD, which is my favorite dividend growth style ETF. Go through how this ETF works, all the basics, the methodology of the underlying index, the performance, and everything else included. Now, this is a perfect video to watch all the way through if you've sort of been on the fence about buying into this ETF, or maybe you already hold shares of SCHD like myself, but you just want to freshen up and understand a little bit deeper on how the ETF works. Either way, this is going to be a complete guide on SCHD that you're definitely not going to want to miss. So if you're a dividend-focused investor, whether or not you own SCHD, make sure to stick around, drop a link down below, and let's get right into it. If you are a dividend investor who wants to level up your portfolio, you need to be tracking your dividend income consistently. And that's why I created the perfect dividend tracker that I've used to scale my dividend income up to all-time highs over the last year. Now, along with this dividend tracker, you're also going to receive my A to Z dividend investing ebook, which shows you how I personally started from $0 several years ago to now where I earn over $7,500 per month in dividends. Now, I also want to add in that if you have ever been on the fence about grabbing the dividend ebook and my custom dividend tracker, you definitely should grab it before the end of the year because the price will be going up. And for those of you that do grab it before the end of the year, you'll be receiving my next volume 2 A to Z dividend tracker for absolutely free at some point next year. So get in before it's too late and grab the custom dividend tracker that you can see right here along with my dividend ebook. I promise you guys are going to love it. Now, just to go over some of the basics, the Schwab US Dividend Equity ETF is an exchange traded fund that's been trading in the market now for around 13 or so years. The ETF has a total expense ratio, which is basically how much you have to pay on a yearly basis to hold on to SCHD, and it's just 0.06%, making it one of the cheapest expense ratios across the entire market, short to things like index funds that Vanguard offers. Now, the objective for SCHD, this is the important part, and the objective for any ETF is going to be very important. You're going to want to know and understand the objective for any ETF before you buy a single share of it, to figure out if or if not it matches what you're looking for. Now, the objective of SCHD is to track as closely as possible before fees and expenses the total return of the Dow Jones US Dividend 100 Index. And although you might be asking yourself, what does that exactly mean? What in the world is the Dow Jones US Dividend 100 Index? It says the index universe is defined as the constituents of the Dow Jones US Broad Market Index excluding REITs. So again, this is going to be the index that SCHD tracks. And this is why the ETF has done so well over the past several years, because the index that SCHD tracks, which again is the constituents of the Dow Jones US Broad Market Index, makes it very hard for single stocks to make it through. Now, I'm not going to go through the entire methodology of the Dow Jones US Dividend 100 Index. I've made videos on this in the past, and definitely check out spglobal.com if you want to read a little bit deeper into it. But just to give you an idea on how hard it is for stocks to make it in this index, it says first of all, stocks have to pass the following screens. Minimum of 10 consecutive years dividend payments. Number 2, minimum float adjusted market capitalization of 500 million. And number 3, minimum 3-month ADVT of US 2 million. Now, this writer said number 1 is already hard to pass with around 93% already failing. Step 2 is very easy and exists to filter out around 20% of US companies. Now, step 3 requires a 3-month long plus average daily volume of trading greater than 2 million per day. Step 4 is easy and exists to filter out 20% of US companies combined. The universe is slightly larger than 300 companies. Now, these last 300 or so companies have to go through multiple different screenings again. And because the names have to go through all these different screenings, the fact that around 100 different individual stocks did make it through and are now going to be a part of SCHD, it's almost a badge of honor. These companies made it through a lot to make it in the ETF. Now, speaking of companies within the ETF, these are going to change on a consistent basis. There's a reconstitution that happens once a year, which again make it very tough for single stocks to even remain in the fund to begin with. Now, as of right now, names like BlackRock, Cisco, Home Depot, Bristol Myers, Chevron, names like Verizon, Texas Instrument, Altria Group, UPS, Pfizer, Pepsi, Coca-Cola, AbbVie, and others, these make up the majority of the ETF. But all in all, there's around 100 different individual names that again give you a ton of diversification, and at least you know that these names made it through the screenings to make it in the fund. So now that we have a slight understanding of how this ETF works and how we understand at least a little bit on the screening process of how stocks even make it into the underlying index. Looking at SCHD's performance over multiple different timeframes, the ETF over the last 13 or so years, just as far as price return goes, is up over 230%. Now, year to date, SCHD is up around 11%, on the 1 year up around 15%. The ETF has never been the fastest growing ETF across the entire market. The ETF also doesn't offer the biggest dividend across the market, but it offers sort of a perfect touch of everything, in my opinion. It offers a ton of growth potential. It offers a nice starting yield of around 3.5%, and offers some massive dividend growth historically. Now, dividend growth is probably one of the main metrics on why I personally am so fond of SCHD. The ETF has paid over the last year or so around 12% more in dividends compared to the previous. And this is one of the main reasons I've been trying to buy as many shares of SCHD as possible while I'm still relatively young at 32 years old, because I don't even really care about how much income I'm getting today or tomorrow. Like I said, as of right now, around $600 or so per quarter. But come 5 years from now, 10 years from now, 20 years from now, I want my dividends to not double, but maybe triple in the next few decades. And that's exactly what's happened over the last, say, 13 or so years. SCHD used to pay 4 cents, 5 cents, 7 cents per share per quarter. Now just as of recently, 27 cents. 25 cents or 26 cents. So to put it simply, SCHD offers exposure to high quality companies that, like I said, have made it through multiple different intense screenings. But along with that, the ETF has grown consistently over time, paid dividends, and paid more and more in dividends to investors. Not to mention, just for a fun exercise, if we typed in SCHD stats in a dividend calculator and looked at a $25,000 initial principal investment into SCHD, a $6,000 annual contribution, which is $500 per month, a 3.53% initial annual dividend yield, 11% dividend increase, 6% annual share price increase, 30 years invested, all the dividends are going to be dripped over the years. In theory, a portfolio that started at $25,000 over the next 30 or so years, if you just let it compound and do its thing, you're talking a $2.7 million portfolio just with a $25,000 initial starting principal. Now again, these numbers are just estimated, take it with a grain of salt, and of course if you added a lot more or a lot less, things could change dramatically. But I think it's pretty obvious and safe to say that SCHD has been and probably will be one of the most popular dividend growth style ETFs for years to come because of its objective, which is simple yet complex in nature, and also the fact that this ETF has consistently paid dividends and paid more and more in dividends historically. So now that we talked about SCHD, we went over my personal position, we even talked about the underlying methodology of the Dow Jones US Dividend 100 Index. I lastly, most importantly, want to hear from you guys down below. Do you personally own any shares of SCHD across your portfolios? And if so, how many shares are you holding onto as right now? Let me know in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.